So our chat with Chris question today is, what does it mean if I receive an income statement from my creditors? I actually received this a couple of times this week, or was asked this question a couple of times this week. So what are we talking about? An income statement from your creditors is an IRS tax statement. It's usually a 1099. And what that means is your particular creditors or your debtors have written off that debt on their books. And so it's now a charge off. Normally a charge off that's just written off, if it's still carrying a balance, which it will, does not mean you don't owe it. So a lot of times people get that confused, and we'll talk about that on another question. But if you receive an income statement from a creditor, that means that they have charged off that debt and they are reporting to the IRS that your income is now more, because they take into consideration the amount of that debt. So they've now just increased your income by the amount of debt that they've written off. So if you got a 1099 from one of your creditors, don't get excited thinking that, you don't have to do anything with it and now you don't have to pay the debt. You need to make sure that you include that amount, that 1099 amount, in your tax return. So when you are filing your taxes, you need to take that piece of paper with you to your tax professional and make sure that they include it, because basically that's now an increase in your income. If you got any questions, the good reason why you need to register for a complimentary assessment, and I'll go over that, or go talk to your tax professional. And by the way, happy pre-tax day. So we all know that tomorrow is April the 15th. Take a deep breath, sigh for those who have not gotten their things in order. It's not too late. Make sure you reach out to a tax professional and make sure that you know what you need to do if you need to get an extension. Okay? So that's our question for the day. If you received a tax income statement from your creditors, make sure that you're including that in your tax return, because that is increased income. And you want to make sure that you are accounting for that, because trust and believe the IRS got a copy of that as well.